This is Jared with the Helton Group at Loan Depot, and today I'm going to be lending some knowledge regarding recasting of your mortgage loan. So what that means is if you put a large lump of money down on your loan and you want to get the lower payments that would do, it basically recasts it or re-amortizes it to that new lower payment and keeps when you pay off your loan the same. So if you're paying off your loan in the year 2050, it keeps it the same as 2050. So some reasons why you want to do that is in this highly competitive market, sometimes you might have to buy before you sell. And maybe you come into a large sum of money when you sell your house and you want to pay it down and then get those lower payments, and that would allow you to do that. Some other reasons might be you just get a bonus at work, get an inheritance, just get a large sum of money. There's lots of reasons why you want to do that, and it kind of involves a lot of planning. So it's important that you kind of plan that out. So an example of what that looks like, so let's just say that you took a loan out and it's for $300,000 on a $30,000 or 30-year term, and the rate was 3%. So your principal interest payment would be $1,264. A year goes by and you have $50,000 because you sold your home and you wanted to pay that down on your mortgage loan. So you got 29 years left. If you plop that $50,000 down on your mortgage loan and re-amortize your payment would go down to $1,027, which is $237 less. So that makes a big difference in your payments. So that's something to think about and a good way to do it. There's a big myth that a lot of times you have to refinance to make this happen, which isn't true. So you need to talk to your servicer because you can't re-amortize your loan or recast your loan on government loans, so FHA, VA, and USDA. You can normally do it on conventional loans at most lenders. Jumbo loans are really based on the investor, so you need to check with them. And there's different rules and procedures. Usually they charge $250 to do this. You have to be current on your loan. There's some other stipulations, but for the most part, it's a pretty easy process. What I would suggest you do is really talk to your mortgage professional to make sure, because mortgage debt is, generally speaking, it's good debt. So it's usually lower rates, it's tax deductible in most cases, versus paying on consumer debt or other debt. You kind of should look at what debt you have out there, or maybe even investing, contributing towards your IRA or other things. And if you need a recommendation on that, you can certainly reach out to me. Also, you don't always have to recast your loan, so you can put money down on it. If you want to keep the higher payments, that's fine. So in that example I used earlier, if you wanted to put $50,000 down on your loan, instead of your loan paying off in 29 years, it'd pay off in 22 years. So it's really, you only recast if you need the lower payments for debt to income ratio purposes or just budgeting purposes. Thank you very much for watching this video put together by the Helton Group on lending some knowledge in the mortgage world. Hopefully it was helpful to you. But if you have any questions or comments, you can always reach out to us, DM us, call or text. The phone number is 541-870-8913. And I look forward to helping you in the future. Thank you.